Hi, welcome to Neppy Invest. This video I'm going to do, it's on Damstra. It's been on the ASX for just over a year. If I remember correctly, they IPO'd on the market in October 2019. Now, ever since they did IPO, I've been sort of thinking of buying into this company, but I've never actually taken that next step. So I've just had this natural interest in their Appendix 4C every single quarter since they've IPO'd, which I think this is their fourth one. So let's have a look at their October 2020 Appendix 4C. So Damstra, ticker code's DTC, market cap of 380 million, so a bit rich, highly valued, and that's probably because the market does like what they're doing, just like I like what they're doing. So receipts from customers only 7.1 million, but even though it was only 7.1 million, they did were cash flow positive in operations to the tune of $2.4 million. And even taking into account their government grants and tax incentives, they were still quite heavily cash flow positive. So that's a massive tick there. I mentioned they did IPO about a year ago, so they've only got 4 quarters of data. And to be fair enough, cash receipts haven't been growing all that much, so it's sort of very lumpy. So you're going to go see it goes 4.6 to 7.2, back to 4.6, then 7.1, sort of like a zigzag sort of numbers. And cash flow, yeah, so cash flow has been positive the last 3 quarters. So for most of their life on the ASX, they've been cash flow positive. So this was record first quarter for revenue, cash receipts, and operating cash flow. My only question about that statement is this is only their first quarter, so you would expect them to be near records anyway. So I don't think that's anything to really gloat about. They do have 47 new clients, and these are just some of the numbers they had in the report. So users 418,000, client numbers 326, recurring revenue 87%. So they have a bit of not churn. They do have high recurring revenues, so the higher the recurring revenue is, the better. And the net client retention is 120%, which actually means, when it's above 100%, means the clients they already have are starting to spend more and more. And that's actually quite positive. So that's what you want your clients to do that you already have on the books, is them to spend more and more. So that number being 120%, that's quite good. Gross margin 72%. I'd prefer that to be a little bit higher than 72. I prefer that to be closer to 90%, even higher than 90%. And the client churn, which I almost got into before, is less than 0.5, and that's quite good. So overall, the numbers are quite healthy there. Probably the only thing I question is we don't have the growth in cash receipts, and I think based off the market valuation, it's not quite attractive enough for me to take that next step. Share price has been quite positive since about June or so. That's would have been probably the time I should have bought in, is around that dollar mark. I was thinking about it back then, and it's never took the. There was so many stuff I wanted to buy back then. So unfortunately, Damstra wasn't one of those companies I bought into. And then like a month ago, we saw a massive increase in share price from about $1.80 or 70 all the way up to about $2.40. And that was based off this. So on Wednesday, the 7th of October, we saw the share price increase substantially from $1.80 all the way up to past $2.10 towards $2.20, right on 12 p.m. And that's actually that is a dead giveaway of actually what happened. And there was an advising service that recommended Damstra at exactly noon. So what they do is they say to their clients, we're going to be recommending our next stock at midday on this day. So be on the lookout for an email or something. And right on midday, they recommended Damstra, and the share price shot up to $2.10 to 20 cents. The funny thing is, this advising service, I won't say who they were, put a price limit of $2. So they was saying, don't buy if the share price gets above $2, and just wait to see if the share price retracts back to $2. But of course, their clients don't really listen to that, and they took the price way up above $2. Although I did have a look at the share price on Friday, and it did fall below $2. So it's gone back to $1.93. And I'm hoping some of the clients of this advising service listened to their advising service and didn't buy in at $2.20 or so, because they could have bought in at $2. Actually, in fact, they could have bought in cheaper than at $2. So that's all I've got on Damstra. I haven't gone into detail what they do. This is not a sort of a in-depth study of Damstra, what they do. They are a SaaS company. I believe they are anyway. But if you have any questions, leave it in the comment section. Otherwise, I'm not a professional advisor. If you do need professional advice, make sure you seek out a professional. That's all. Have a good day. Bye.